Welcome to another episode of Farming in Ohio with Chris Bruynis. Today he's going to be talking about income tax issues for timber owners. So stay tuned.
This is Chris Bruynis. Welcome again to Farming in Ohio. Today I want to talk about what are some of the tax concerns or tax issues that landowners have when they sell timber to a timber buyer or to a sawmill, however they may sell it. And so let's go ahead and get started here. And one of the big issues that we have to think about is what are we when we sell that timber? And there's really three main classifications. And so the first one, do we own this timber stand, whether that's a wooded area that we're using for personal enjoyment, we're riding our four-wheelers out there, or we're using it for hunting, but we're not really generating any income from it, and we don't own it with a profit motive, if you will. We just own it, and occasionally we might want to sell some timber off of it. The second category is an investment category. We basically have purchased this as an investment. We hope to generate some profit from growing timber, and we do things to improve that timber stand, such as controlling wild grapevines, controlling the underbrush, the times that we might get some invasive weeds coming in there or invasive tree species, and we try to manage that to maximize our timber harvest. And the last one is, are we a trade or business that we're in the business of making timber, and that would be taking the timber off of that property ourselves, cutting it into timber, or selling it directly to the timber sawmills, and then we'd be considered a trade or business, and each one of those has a different tax consequence. So let's talk a little bit more about personal use. We have that. I'm located in Ross County, and we have a lot of wooded areas, and we have people all the time looking to buy 30, 40, 50 acres of woods. They're looking for a place to either ride their horse or an ATV, or to put up a deer stand and do some hunting. And so that's personal use. Now, if we have that land and we're having hunting leases, we're charging other people to come hunting, then it changes it to become an investment property, and we no longer have this personal use category. But if it is personal use, there's no management, no investment, no labor to improve the timber stand. It just exists, if you will. And we can still qualify for capital gains treatment of the sale of that timber. And so there's nothing wrong with being a personal use, other than it would fall under the hobby rules of hobby farming rules with the IRS, and any deductions that we have for the harvest of that timber would be limited to the level of income generated by that property. Not a bad thing, but just be aware of it. Let's move on to a timber investment scenario. And this is maybe we have we're farmers. We own some farm ground that has some wooded ground on it. My family has that situation. We have 530 acres, and 50 acres is wooded. And so timber production is not our principal source of income. Farming is, but we do manage that property to hopefully harvest timber once every 20 to 30 years off of that wooded area. And so we're trying to maintain some of the underbrush so it's not growing up. We're still getting some new hardwood seedlings planted in there over time, that we can have a good timber harvest in the future. And so it's an investment property. The passive activity loss rules in IRS do not apply to this. And then timber would be considered a capital asset. So when we sell that, it would go on a Schedule D, capital gains and losses. And then the last one, are you a timber business? And again, it's an activity that we're doing on a regular basis to create profit. And so, it has to be regular, continuous, and substantial. That's wordings from the IRS code. And so, we can do some timber work and not become a business. But if we're in it to the level that it's a business, and I don't want to get too far down into the weeds, then we are a Schedule C business, and it goes on our Schedule C, profit or loss from business, and it no longer gets capital gains treatment. And the reason capital gains treatment is important is it's a much lower tax rate than what a regular profit or loss may be. And so when we start thinking about what are our best management practices, if you will, for timber tax management, we really want to maximize our after-tax proceeds of a timber sale. And there's three things that we can do that would help us maximize our income or our after-tax proceeds. And the first one is to establish a basis in the timber as well as the other assets of any property we own. I'll come back and speak more on that basis in a little bit. That's a confusing concept for some people, and it's really important to understand that. So I've got another slide coming where we'll talk more about establishing a basis on our land. And then the second thing that we need to do is, since we're only doing a timber harvest once every 20 to 30 years, we want to keep track of any additions or reductions in that timber basis. And additions could be labor that we've done cleaning the woods or cleaning the undergrowth out, cleaning out the grapevines, any seedlings that we bought and purchased and planted in that timbered area. And so those are all things that'll be capitalized, and then we can expense them later. But we add to that timber basis. Reductions would be harvest. If we have a woods and we harvest 10% of the trees, that might represent 50% of the basis from when we bought that. But again, we need to keep track of that so we know how much basis is left for future use. And the last one, we really want to be an investment property. We don't want to become a business in terms of a timber business, but we really want to qualify for capital gains treatment on these timber sales, just because that's going to maximize or reduce our tax liability. So let's talk a little bit about basis. And basis is really a measure of your investment property, of your investment in property for tax purposes. And so let's think about this. Let me give an example that does not have timber on it first, and then we'll go to an example with timber. You buy a 50-acre field that has no houses, no barns. It's just vacant land, no trees. It's 50 acres. If I buy that for $5,000 an acre, and then 5 years from now, I turn around and I sell it for $6,000 an acre, my basis in that property is what I paid for it. And so the gain on that sale between $5,000 and $6,000 would be $1,000 an acre. And that $1,000 an acre would be what I would claim on capital gains and have to pay capital gains tax, since land is a capital asset. So now if we take a property and it has trees on it, it's wooded, and let's say we pay $3,000 an acre for this property, and we own it for 10 years, and we sell it for $4,000, we still would have that same $1,000. But now let's back up. We bought it, and it has mature trees on it. And let's say we estimated, or we had it appraised, the value of the property might only be $2,000, and the value of the trees when we bought it was $1,000 an acre. If we sell $2,000 worth of trees off of that property while we own it per acre, then we have 1,000 that was basis in the property or in the trees. And so we have that same $1,000 capital gain tax on that sale of the timber versus $2,000 of ordinary income. Now, when we sell that farm or that property in 10 years, well, we've had that harvest in between of timber. Well, our basis that's left in that farmland or in that forested land is $2,000 because we used $1,000 for the trees. And now if we sell it for $4,000, we still have a $2,000 capital gain. So it's basically, how do we partition the value of a purchase price to the different assets that are sitting on a property? And so forest is one of the things we don't think about when we buy it, but we really should have a forester at the time of purchase or at the time of inheritance go in and put a value on the trees to determine what the basis is for that property. And if we do that, and let's say we have a forest fire and it all burns up, we can claim that then as a capital loss in terms of loss of those trees in that fire. So it's important to do that. But we need this basis to do a couple different things. We need to figure out whether we made money or lost money on the sale, exchange, or disposition of the timber on that property or the property itself. And then any kind of depletion deductions, basically, if we do a sale of timber, how much of that basis do we use? Now, practically what happens is, if we had $1,000 of timber value when we bought property and we sell timber, typically we use all of that basis on that first sale. There's nothing illegal with that or wrong with that. And it's just a whole lot easier than trying to track what percent of that basis did I use on this sale compared to another sale 20 years from now. Oftentimes that changes generations, and it's really hard to track that. And so really what we do is we use all of that basis up on the first sale. And then the last one I already mentioned, if we would have a fire, any kind of casualty loss deductions. Another thing that we're seeing more and more of is timber theft. And so if somebody is stealing timber off of your property, walnut trees or a high ticket item that often gets stolen, we would have that number then to figure out what that casualty loss would, and we can make a tax adjustment for that.
Chris, you bring up some interesting points. I know that there are many small, really small farms in Ohio. And when I say small, they might have an acre or two of timber that they try to process, or they have one crops or things of that nature. You are showing that in the tax structure, there is a tremendous amount of time and effort that needs to go into timber and property. I'm just curious, are there a lot of farmers that follow your suggestions on the tax?
Yeah, great question. And size doesn't make it less complicated. Whether I have 5 acres of timber or 1,000 acres of timber, the challenges are basically the same. Most people don't prepare their own taxes anymore. They hire a competent accountant to do that for them, and they will be asking the right questions. I think the thing that I really wanted to bring forth today is, if I own property with timber on it, with trees on it, and I think someday I'd want to sell that, harvest some trees off of it. Not everybody wants to have trees harvested off of their property, but if I did, one of the things that I could be doing today that I can go and timber is one of those things that the IRS will allow us to, after the fact, go back to the time of purchase, and we can get a certified arborist to come in and say, at the time, 20 years ago, when you bought this property, we can estimate based on how much trees grow each year, how many board feet of timber was on that property and what the value of it was at the time of purchase. And so if we think we ever want to have a timber harvest, we can go ahead and get that original basis determined, even if we've owned the property for 20, 30, 40 years. That way, when we do sell the timber, we have that to take off of the purchase price, reducing our tax liability and leaving more money left over for us. And so, just talking about this, that's the one thing, that I really want to mention. It's not too late to go back and figure out what the original value of that timber or what the basis of that timber was.
That's very interesting. I know that if I were ever thinking about starting a timber farm, a Christmas tree farm, um, would I have to go through the same process, since I'm not going to realize anything for 5 years in profit or loss or anything of that nature?
Well, a lot of our Christmas trees, grape vineyards, a lot of these plants that we're planting, that the income is going to come 5 or 6 years from now. We'll do what we'll capitalize that investment. We'll basically add it up until we sell something. And then when we sell something, that would be whatever our cost we're getting there, our labor cost, our input cost, the cost of the tree seedlings, whatever that is, we just continually add that up. And then when we have a sale, we can say, well, we have this much in it, so only a percentage of that sale is profit. And also then being able to claim that capital gains tax treatment on that. So that would be another way of looking at that,
Oh, okay.
Patrick. And so we've already talked about the original basis, when we can do that going forward. But let's say the timber property is purchased, then we just have to allocate that purchase price between the different assets that are there, the land being one, the trees being the other. Now, if we are gifted, and again, when we start talking about estate planning, and sometimes we'll see parents will gift a piece of property to their kids. Well, the basis is whatever the parents paid for it, not what the value was of the time it was gifted. And so that's just a little tax law that sometimes trips people up. And so it cannot exceed the fair market value of the current. So if for some reason property got cheaper, it doesn't happen very frequently. But I'm just taking my dad's farm that was inherited, not gifted to us kids. And a lot of that property he bought for $50 an acre back in the early 60s. And so, if it was gifted to me, then my basis would be $50 an acre. And if I would sell it for $5,000 an acre, I would have $4,950 of capital gains to be taxed. Now, when I inherited it, we got what we call a step up in basis, and that is the fair market value at death, and that was $5,000 on this particular farm. And so if I turn around and sell it for $5,000, I would have no tax liability. And so how we acquired the property matters in terms of what we can set aside for the basis of that timber. And so what are the records that we need? And this goes back to what I mentioned earlier, Patrick, in terms of being prepared now if we're going to have a sale in the future. We would want to know what that purchase price or the inheritance value that was um, assessed, or the gift basis. If it was gifted, what was that value that my parents paid for it. We want to know that, so we ought to have that in our records somewhere. We would want to have a survey of the property. We would want to have any kind of legal and accounting fees. Those would be rolled into the basis and adds value to that basis of that property. And then we want to separate out the value of the land versus the value of the trees versus the value of any other buildings. I've even seen them separate out the value of drain tile in farm fields and depreciate that after the land has been acquired. So how do we want to do that? And then we want to have some sort of at the time of acquisition, whether that's purchase, inheritance, or gift, what was the value, the timber volume and value? And like I said earlier, this is one of those things that the IRS will let us go back in time. And so if we didn't do this when we originally acquired the property, we could do it today. I mean, there's no time limit, but we ought to go ahead and have that done if we're planning on a sale at any time in the future. And then any kind of investments we made into that property, site prep, seedlings, hired labor, fertilization, depreciation, all gets capitalized into that basis, and then we can use that at the time of sale to reduce our tax liability.
You know, Chris, we have a variety of different taxes. For instance, we have the federal, which we're primarily talking about, but you also have the state and the county. With each of those, are there different things that you have to keep track of also?
Not so much. I mean, the state taxes really pulls off your federal tax return. Any kind of property taxes is just a local assessment. It's not really tied to earnings of the property. And so really the federal tax is the big one that we need to manage with the sale of timber.
And let's suppose that I have some tax questions, just general tax questions. Should I contact you at the Ohio State University Extension Program? Would you be able to assist with that?
There are several of us at Ohio State that are pretty good in knowing what the tax law is. One is Barry Ward, who runs our Ohio tax schools for our professional tax preparers. David Marison is a colleague of mine, also a state farm management specialist with Ohio State. And they can contact me, that's fine. But if I don't know the answer, I guess what I'm saying is I have some resources that I can reach out to make sure that we get a correct and appropriate answer. But that would be the three people that come to mind at Ohio State that if I had especially agricultural tax questions, would be a source to go to.
Would you be able to help fill out the tax forms?
That we do not do. But we do have a list of agricultural tax practitioners that come to our tax schools that we feel very confident, and it's not really a recommendation, it's a list. If they've asked to be on our list, we put them on the list. And so it's not an endorsement, but at least we have a list of people that are familiar with agricultural tax issues, such as the timber sale issue that we're talking about here today.
Well, we have just a few minutes to sort of sum up things. I'll follow your lead.
Well, yeah, just here, income tax, the reason we want to get it is capital gain. We need to hold that property for more than a year. Most of us do, but the capital gains tax rates are 0, 15, and 20%, and that's respective to different income levels. And so, if I have a lot of income, the most I'll ever pay is 20%, which is much lower than some of the higher tax brackets can get up into the 40, 45% with our normal ordinary income tax. So it is a savings, and it's something we want to strive for. I had an example of just how to calculate the gain or loss We have what we sell it for. We have the expense of the sale. We can subtract out our adjusted timber basis, and that gives us our capital gains. It's pretty simple math. It's not that difficult. But here's my summary slide. Really, if we want to maximize our after-tax proceeds on a timber sale, go back and establish that basis. If we haven't done it to date, we still can do it. We want to keep track of any kind of cost that we had in maintaining that property, and then qualify for capital gains. And the last thing I want to throw up here, there is a really good website, timbertax.org. And so if you want to read some more, if you're one of those people that said, I just like taxes, there's a few of us out there, and you want to read some more about timber tax specifically, there is a national timber tax website that has lots of great information.
On the screen is Chris's information. You can contact him. He's an extension educator with Ross County.